If you're an entrepreneur, you know what it means to take personal and financial risks, create jobs that support your community, and devote most of your time to your business. But do you know how to plan for a successful exit from your business? Do you know who should be involved in creating your succession or transition plan and the steps along the way? Welcome to Finish Big, the podcast with Mark Dorman from Legacy Business Advisors. The podcast theme is inspired by critically acclaimed business author Bo Burlingham, author of Finish Big, How Great Entrepreneurs Exit Their Companies on Top. In this podcast, you'll hear success stories of exit plans done right and pick up practical tips based on years of Legacy Business Advisors' expertise and knowledge about the largest and most important financial transaction of your life. Now, on to the show.
Welcome to Finish Big, the podcast with your host, Mark Dorman. Today's guests are Kevin Vonderau, Chief Lending Officer of Westfield Bank, and his colleague Dan Bender, Senior Vice President and Commercial Lending Team Leader. Today's topic is something near and dear to our heart here as Ohioans. It's employee stock ownership plans, or more affectionately known as ESOPs. So first of all, let me just start by welcoming Dan and Kevin to the show. Good morning, gentlemen.
Good morning, Mark. Thanks for having us. We're excited to be here.
Westfield Bank, and both of you personally have been friends of the show and friends of mine for quite a long time. So this is something I'm very, very excited about. I'm excited to give our listeners a taste of what is becoming quite popular, even more popular. They're saying that the 2020s are going to be the decade of the ESOP, as a lot of baby boomers seek to finish big. But let's just get started. I'm going to go ahead and kind of set the table here with some data points, and then we'll turn it over and find out more about Westfield Bank, more about your roles within the bank, and we'll see where it goes. Sound good?
Sounds great.
Yeah, sounds great.
Terrific. So first of all, according to the National Center for Employee Ownership, or what is known as the NCEO, there are approximately 6,500 ESOP plans, which represent about 14 million participants throughout the United States. As I was doing my research, I found it very interesting, but then as I thought about it, I thought, well, that makes sense. But ESOP companies typically grow, on average, almost 2.5% faster than comparable non-ESOP companies. Certainly one of the reasons why would be their tax-favored nature, their ability to accumulate cash, and perhaps even acquire other companies, which we'll touch on. But according to, albeit a dated study, 1997, that companies that have ESOPs, or employee stock ownership plans, in place, those employees that work there, on average, make between 5 and 12% greater wages. Very interesting. But this is striking. Nearly 3 times the amount of retirement assets in their retirement plans, which an ESOP is a retirement plan, and we'll get to that, but 3 times the retirement assets, again, compared to colleagues or their neighbors at comparably sized companies. Some of the more famous ESOPs in America would be Publix grocery store with 230,000 employees. And if you're a golfer or a hunter, the folks that make Gore-Tex, WL Gore, is an ESOP with about 12,000 employees. So with that, and without further ado, I'm going to turn it over to our guests, and let's get to know Kevin Vonderau, again, Chief Lending Officer with Westfield Bank, and Dan Bender, Senior Vice President. Kevin, let's start with you. Tell us about Westfield Bank, maybe give us some background, history, et cetera.
Sure. Thanks, Mark. Westfield Bank was started in 2001. And it really started after some legislation changed. Gramm-Leach-Bliley went into effect in 1999, and it repealed the Glass-Steagall Act of 1933. So I'm getting a little bit of history lesson, but it is relevant in our startup. So what it allowed for is financial intermediaries to own each other. So it broke down those walls. And our founder, John Park, was hired in 2000 and started really planning the blueprint for the bank. And the bank opened up in 2001. In a very short period of time, we've grown today to 2.1 billion in assets, and it makes us the 10th largest community bank in Ohio. And I think really a lot of our success was around really our strategy and our ownership. So when you think about it, in the early 2000s, that's when technologies really started blossoming in the banking world, and really the digital capabilities, online banking, then shortly after that, remote deposit capture. So really what we've done is we leveraged that technology and really brought banking to our customers. And that's really made us successful, because when you look at a bank, typically our size, they have 20 to 30 branches out there, and we don't invest as much in brick and mortar. We invest in technology and in our employees, and we have 7 locations, so we're able to service our customers by using technology. But it's also our ownership structure. So we're owned by Westfield Insurance Company, which has been around for 175 years. And while we've been around for just a little over 20, that gives us validity when we're telling our stories, right? We have that long history behind us. But it's also how we're owned. We're privately held, and that really allows us to be long term in our vision, in our strategy. So we're not worried about those quarterly earnings reports and like satisfying our shareholders, and it really shows in how we take care of our customers, because we be long term with them, and we know not everything's perfect out there, and so we're able to help customers in good times and in bad times. And I really think that's something that separates us a lot from our competition. It's also our management team. All our decisions are made locally. We empower employees to be able to make decisions. So we're able to help our customers when we're meeting and are in front of those customers. And it's good to know that, like the deposits that they put into our bank, we reinvest locally back into other businesses in the community.
Yeah, I mean, I could speak firsthand, Kevin. That's a great background, and thank you for sharing that with us. But Westfield Bank has really redefine relationship banking so often now in my travels, and you guys know how many companies our firm's in and out to see, but they're always somewhat complaining about the fact that they have great relationships locally with their lenders, but there is a loan committee and behind some secret curtain, whether it's in Columbus or New York City. And they always say to me, Mark, if I could just tell my own story, I could impress upon these lenders how good of a company we have. And that's something that Westfield Bank really lives and breathes. Fair enough?
Yeah, no, that's exactly it. We bring the decision makers out to the company, so we get to know and hear their story, and it's a lot easier to make a decision when you're hearing it firsthand, and you can understand what that company's what their strategies are, and maybe their challenges that they're going through.
Yeah, great. So let's get a little bit more granular. Our show today is on employee stock ownership plans, or ESOPs. We're joined today by Kevin Vonderau, Chief Lending Officer of Westfield Bank, and Dan Bender, Senior Vice President and Commercial Team Lead. Dan, tell us how Westfield Bank got involved in the ESOP space.
Sure. Yeah. And thanks for having us, Mark. I've had the opportunity to listen to a couple of the Finish Big podcasts that have been pushed out already, and a lot of good information in there. So a lot of business owners ought to be listening to this podcast. And
thank you.
It's a pleasure for Kevin and I to join you here today. Your question, it's a good one. And, Kevin gave some context regarding our ownership being owned by Westfield Insurance. And really, when we started as a bank, one of the areas that we did a lot of work was actually working with insurance agents, both locally here as well as some out-of-state agents that were selling Westfield Insurance, and we helped them with business perpetuation financing. So we allowed those younger agents to buy out the individuals that were looking to retire. A number of years ago, we expanded that to registered investment advisors, something that I know you're familiar with that space, Mark. So really, it's in our relatively short time as a bank, 22 years now, we've really done a lot in terms of helping that next generation buy out those who are looking to retire. When I joined the bank in 2019, I had a chance meeting with an investment banker named Sean Ely, who's with Lazier Capital, and Sean is a big advocate for ESOPs. A lot of the work they do is work with business owners who are looking to exit and doing the feasibility study and things that we'll talk about later. But Sean really helped me kind of understand where an ESOP fits, where it doesn't. And shortly after that meeting, I was with Kevin and a few of the other lenders within the bank, some of the other market leaders, and the question was posed, we've done a great job with the agency side and registered investment advisors. Where else can we be kind of more of a niche lender and be subject matter experts and really bring value to our customers and people who we want to onboard as Westfield Bank customers? And I brought up ESOPs, and the conversation continued, and we looked at it and explored the marketplace. And as you know, there's a lot of business owners that are owned, a lot of businesses are owned by baby boomers, anything between 2.4 million to 2.8 million from what you read. I know, Mark, in a prior podcast, you mentioned about 10 million businesses that will be transitioning in the coming years. And ESOPs seem to be a very viable option. So it's something that we explored and kind of built out some credit policy around, aligned ourselves with some really good folks in the space, some ERISA attorneys and things of that nature to help us understand the market. And we're off and running now and talking to a lot of non-customers about ESOPs as well as our existing customers.
That's terrific. That's great background. Thank you. Thank you. So Dan, talk to me like I'm a second grader. What exactly is an ESOP?
A good question. Great place to start. As you mentioned earlier, employee stock ownership plan is really what ESOP stands for. And in its simplest form, Mark, an ESOP is a retirement plan. The company is sold to a trust, and the employees of that company are the beneficiaries of that trust. So over time, shares are allocated to the employees, and those shares are valued annually, so that when that employee eventually retires and leaves the organization, they've built up a retirement asset that they take with them. So it's really, again, it's a retirement plan, but it's also a way for a business owner to sell the company.
Mm-hmm. And as a retirement plan, a qualified plan, it does have similar attributes to other qualified plans in terms of tax deductible contributions, tax deferred growth, subject to normal retirement plan rules and compliance, so to speak. So that creates a really unique environment in its use in business continuity, where a business owner could essentially sell his business to the employee workforce. And by the way, correct me if I'm wrong, Dan, it doesn't have to be an all or nothing proposition. You could sell a partial interest, minority interest, could be a majority interest. But my understanding in the research and my experience tells me that the shares of the company that are owned inside the ESOP trust are not subject to tax, correct?
Correct. There's tremendous tax advantages for all parties involved. The selling owner, and I don't want to get too much into the weeds of a 1042 exchange, if it's a C Corp, things of that nature. But yes, there's real tangible tax benefits that are one of the reasons that ESOPs are attractive.
Mm-hmm. And such that the shares that are owned by tax, then I don't have another silent partner and Uncle Sam in my business for those shares. So that enables us to project higher growth rates, perhaps higher compensation, higher retirement plan accumulation, all the things I pointed to in our introduction here. But Kevin, back to you. Why would a business owner want to sell their company to the employees as opposed to a strategic buyer or a private equity firm? Again, my experience in asking that question, Kevin, is that we know that a strategic buyer is going to be my highest potential price. Are there discounts involved if I sell it to my employees? So what's the angle there, so to speak?
I don't think it's because there are discounts or anything like that. I think a lot of times it's more emotional, right? It's you built this business, you've built not only the business but the employees, and you've grown with those employees, and they've become more like family. So it's a legacy you want to leave behind. And a lot of times, if you sell it to a strategic buyer or maybe private equity, there's chances that that company can be broken up or moved out of that community. So a lot of times, as good stewards in your community, you want to continue to reinvest and build in that community. And an ESOP's a great way to do that, especially if you don't have that second generation that is wanting to stay in the business or is available to come into the business and take it over. It's a great option to sell it to those employees, and then with that, continue to build that company and stay within that community.
Yeah, I mean, we've seen it firsthand. We know communities companies in our community here in our own backyard that have opted to do an ESOP. I suspect my experience tells me again that, they could have probably gotten top dollar if they'd have gone in a different direction, but the intrinsic value of leaving that company in the community for the benefit of not only the employees, but the community in which it serves, the microeconomy which they've created, et cetera, overrides top dollar. But there's a twist in that I might sell it for less. And Dan, we'll go back to you here. When I go to reinvest those assets, I do have a tax favored treatment on the sale proceeds, correct?
Correct. Yeah. I mentioned a 1042 exchange. Those are for C Corps. You can basically take those assets, reinvest them into certain assets or certain asset classes, domestic U.S. stocks, things of that nature. And what it does, it can either defer or possibly totally eliminate the capital gains tax on the sale of the business.
Right. So you're saying that if I check all the boxes that an ESOP is a good fit for my company, and a driving force for me is the intrinsic value and the feel good, which is so much a big part of Bo Burlingham's book, Finish Big. And what am I going to do? And I feel good about people, helping people along the way, which is one of the critical themes there, that I could in turn have a significant tax break. So it's almost as if Uncle Sam is saying, hey, tapping business owners on the shoulders, if you haven't looked at this, you probably should. That being said, Kevin, we'll go back to you here. Are there certain level of size of companies, industries, earnings where it makes sense? Or, and by the same token, the other side of that pillow would be, are there companies that are too big, too small, et cetera? So walk us through that.
Yeah, that's a great question, because an ESOP's not for every company, right? Is our listeners are hearing today, that there is some complexity around that, and some compliance that you have to make sure that you're able to manage through that. And there's some cost around setting up an ESOP. There's a lot of benefits to it, but again, there's going to be cost in getting started and going down that path. And we always say there's the 5 C's of credit. We always say there's the 3 C's on the ESOPs, on the ESOP side, and that's cost, complexity, and compliance, that you have to make sure you manage and are able to get a handle on all of that. But when you look at an ESOP, where it really starts making sense is probably the number of employees you have. You probably want 20 employees or more when you look at it. And then you definitely have to have some revenue size and profitability size. And a lot of times we look at their EBITDA, right? It's their earning before interest, taxes, depreciation, amortization, and some add backs. When you throw that in, you want an EBITDA of at least $1 million or more, where it starts making sense, because there are costs involved with it. There's financing costs involved with an ESOP, and you want to make sure that you have the capacity to be able to pull that transaction off.
So in Westfield Bank's role, just for the benefit of our listeners here, I know, and I'm asking this question, if I'm selling my business to my employees through an ESOP, I could choose to carry the paper, be seller financed, if you will. Doesn't always feel good, puts me at risk. Or I could partner with Westfield Bank and have what's known as a leveraged ESOP. So walk us through what a leveraged ESOP is, please, and what's Westfield Bank's role within that.
Let me take that one, Kevin.
Yeah, Dan, if you don't mind, and then I can add in a little bit more. I have some thoughts around that too.
Sure. Yeah, it's a great question, and we've seen in the marketplace a number of companies that maybe because of time constraints or what have you, they'll close the deal 100% seller finance. So let's, for some made up numbers, let's say a company's got a $2 million adjusted EBITDA, it's valued at a 5X. So you got a $10 million company. The company can, again, the owner can sell the business and hold that paper for $10 million. But to your point, Mark, there's some risk there. So typically what they'll want to do is get a bank partner involved to take on a portion of that. So we might come in and do, let's say, 2.5 times. So we'll give a $5 million cash out to the seller at close, and then he or she will maintain that $5 million seller note behind us. So that's kind of a typical way in which it may break down. No two deals are the exact same. So kind of depending on the collateral picture, the stability of the cash flows, number of factors really kind of play into how much senior debt we can provide in a deal.
Interesting. Go ahead, Kevin.
Yeah, I was just going to add on to that, Mark. A couple things you mentioned earlier was, like, a lot of times the seller may not get the premium dollar that if they're sell to their employees that they could to an outside buyer. But depending on the structure, if they hold paper, that's another way for them to make additional revenue, right? Because they're going to charge interest on top of that. So they'll make additional money down the line. They don't have to take all their chips off the table at once. And then structure, I mean, we can be very creative in that. It could be all seller financing, as Dan mentioned. It could be some bank financing or a combination of the two. And you mentioned a lot about the tax savings that these ESOPs can provide. And a lot of times you try and structure that where that tax savings covers most of that debt payment to the bank. So it's almost neutral from a cash flow perspective. So there's a lot of different ways that we can look at and structure ESOPs just to make it more effective for that company.
And this is all part of this exploration process. Again, plug for Bo Burlingham's book, Finish Big. Exploration is stage one. But as I'm exploring my options on my exit, ESOP is something, if initial indications are that I fit the mold, so to speak, in terms of size of company, number of employees, free cash flow, to understand the feasibility. Is this actually, so there's actually a study that's gone through. So Dan, walk us through what's involved in an ESOP feasibility study.
Yeah, so that's, you mentioned the word exploration, right? Feasibility is probably synonymous with that. So really it's kind of when a business owner is considering an ESOP, doesn't really know how this is all going to look, what they'll do is they'll engage valuation company or investment banker that will come in and they'll look at the historical financials of the company, but they'll also talk about projections and forecasts and really kind of get to understand the business and what the future cash flows may look like. From that point, they can kind of back into a number that they believe the company is worth. And what they'll do for the owner or owners is map out kind of saying, okay, if we can negotiate a final sales price of, let's say, that $10 million that I used in my prior example, here's how the cash flows will look to you net of tax and kind of long-term. Here's what you're going to get year 1, 2, 3, 4, and they kind of map that all out so they can kind of get a gauge of, okay, this makes sense. I understand how much I'm going to get, when I'm going to get it. So that's kind of the first stage, and they may even get into that feasibility study and come back to the business owner and say, listen, we really don't think an ESOP is an appropriate exit strategy for you. Your product has become obsolete. The management team isn't strong enough to continue on without you. Whatever the case may be, all those things are kind of discovered in that feasibility study. But the kind of the final deliverable is that document kind of showing what, again, they believe the company is worth and how those dollars will be harvested over time.
Yeah, I want to just make sure that we impress upon our listeners, you can't have an ESOP without a good management team, correct?
Absolutely.
I can have 20 employees, Kevin. I could have 40, 50, 100 employees. I could have strong earnings or terrific EBITDA, good valuation. But in my travels, we see too much owner centricity in a business, too little lean management. And so this whole exit preparation process that our team's involved in is helping business owners create an environment and build into their business the attributes that will allow them to then exit either to a third party or an ESOP. And one of them is a seasoned and veteran management team. Can you comment on that, Kevin? I know you're part of the leadership team at Westfield Bank.
No, that's key. I mean, if you don't have a good team in place, it's hard to transition that company, especially if it's going to be to the employees. It's key when you look at it. That's one of the things when you look at a candidate for an ESOP. It's got to be a good company, a growing company, a profitable company. But one of the big keys is they have to have a strong management team to be able to pull that off. And if you don't have that, it definitely will impact the success or potential success of a transition.
Yeah, no question. And particularly if you're, if you don't have a management team, there's not a bank in the world that's going to lend, in Dan's example, $5 million.
Exactly.
And hope it works out. And there's not a business owner that would be their own bank and sell or finance their business without a good management team. So these are things that we're always stressing to our owners. Dan, back to you, and just want to share with our listeners, we're here today with Kevin Vonderau, as the Chief Lending Officer of Westfield Bank, and Dan Bender, Senior Vice President and Commercial Lead Team. Dan, are there certain industries that are more favorable to ESOPs, or is it pretty industry agnostic?
There are certain industries where it works better than others. And a lot of that, I think, boils down to industries where you have less turnover. things of that nature. I think of, I just in the news here in Northeast Ohio last week was the news that the owner of the Memphis Kiddie Park passed away. And it having 4 young kids, it caught my attention, and I thought about what's the succession plan there? Is their family going to be taken over? And the type of employees, they probably don't have that many employees at a kiddie park like that, if you're familiar with it. And they probably change over year. You probably have high school, college kids stepping in. That wouldn't be a good spot for an ESOP. Typically, where we see successful ESOPs, the number one industry in Ohio, as well as at a national level, is manufacturing. That's number one. Number two, kind of behind that, is your professional services. So think about engineering firms, IT consulting firms, businesses where the assets really go home every night. That's actually number
architectural
2.
firms. I've seen that. Consulting firm, right?
Yep. And if you round out the top 5, number 3 would be finance and insurance companies. 4th being construction, which we've got a lot of that here in Northeast Ohio. And then lastly, top 5, wholesale trade. So, it's tough to do in retail and some other settings like that. But having said that, I mean, you mentioned Publix grocery store. It's the biggest one in the nation. Here locally in Ohio, we've got Discount Drug Mart and Bueller's. Those are household names that I think a lot of your listeners are familiar with. So it can be done in different industries, but we see a lot in those manufacturing, construction, IT, finance type companies.
That's a great overview. Thanks, Dan. So Kevin, we've talked about the benefits to the owner, the benefits to the community, perhaps. What are the benefits to the employees? And for that matter, if I'm going to become an owner in a business, that means risk and that means capital calls. What's in it for the employee, and do they have to put any money into the deal?
That's a great question. So do they have to put money in the deal? No, they don't. But the benefits they do is they get an ownership in that company. And depending how it's structured, like, you can continue to build up that ownership throughout time. And there's different ways that you can build that out. But I think really what shows it, and you mentioned this a little bit earlier, when you look at an ESOP company versus a non-ESOP company, they tend to perform a little bit at a little bit higher standard. Part of it is, and we have customers that are ESOPs, and we have conversations with them. The employees get more engaged in that process, right? Because they're part of the ownership team, so they have a vested interest in it, and they're more engaged in meetings. They're more engaged when there's like decisions or communications around like controlling costs or profitability, because they know that's going to have a direct impact on them. As you mentioned before, is historically, when you look at it, the performance of an ESOP versus, because it is a retirement plan versus a 401k, typically the ESOP will outperform a traditional 401k. So there's a lot of benefits for that employee.
Yeah, we cited those earlier, right? Benefits, employees typically make more money. But the statistic that just grabbed my attention, imagine having 3 times the retirement assets of the business across the street. Employees adopt this ownership mindset. I'd rather bet on myself and my colleagues than perhaps Wall Street, as an example, right? Invest their money in standard investments. So I can't thank you enough. Let's talk about ESOPs. If you wanted to go through a feasibility study, Dan, what are the next steps? So if I had a client, or we have a listener on the line that says, geez, that sounds interesting. How do I get a hold of Westfield Bank? And what should I expect in that conversation?
Yeah, so if someone's here's this podcast, Mark, and they're interested, we'd certainly welcome the call and the conversation and kind of get the ball rolling. I think what's really important out of the gate is for business owners to surround themselves with the right advisors, people who are familiar with the ESOP space. Don't call your neighbor who's a family attorney, or your nephew who's just past the bar. You want to get yourself with some seasoned advisors, some ERISA attorneys that have been in the deal flow before, good valuation folks, good commercial bankers, good investment bankers. And then you kind of need someone to really kind of quarterback that relationship. So I would start by, just talking to a lot of people, sharing their, a little bit about your business. That's another nice advantage of an ESOP. We didn't really talk about, Mark. For an exiting owner, if you did go to the strategic buyer or private equity route, you're sharing your company's financials and confidential information with a number of people throughout the marketplace. With an ESOP, it's more of a quiet transfer of ownership.
Much more private, right?
Much more private. Yeah, there's probably a handful of individuals that would really understand and know the the financials and get to understand customer concentrations and all those things that go into assessing an ESOP's viability, underwriting the commercial bank piece, and so forth. So yeah, it's a small group, but you want to have the right group.
Yep. Here on the Finish Big podcast, we are huge fans of ESOPs. I think we're also obviously huge fans of working with a experienced exit planner. One of the things that I see all the time, ladies and gentlemen, is if a financial intermediary, an investment banker or attorney, they might have an angle or a dog in the fight where they're trying to steer a particular client into a transaction that may not only benefit the business owner, but benefit the firm that's helping as well. An exit planning process is going to be much more open-minded and say, hey, have you thought about this? Or maybe an ESOP's a good fit there. I think you would agree with that, Dan and Kevin.
Mark, one thing I wanted to point out too is we're talking, and I think we've had many conversations around this, and you experience, especially as you're working to help companies perpetuate their businesses, is a lot of times people don't realize the time it takes to go through this process. They think it's going to be okay. Oh, geez, I can do this in the next year. I want to retire. I want to retire next year, and I want to put that plan in place. But this is a multi-year project that you have to go through with, and I think that's key. When Dan said getting together with your partners, you got to work together with a team in putting this together, because you want to make sure you're doing what's best for yourself. You're getting the most money you can, but you're also doing what's best for the company too. And a lot of times owners, and we have this conversation too, is owners don't realize how much of that value of their business is really based upon them. And that's where they have to divest that and make sure it's based upon the company, not just the owner. So when the owner leaves, that value goes away, and you only have a shell of what that company truly is. And so there's so much more to think about and plan for when you go to exit from a business.
Yeah, thank you for the plug for our process. Our guests today have been Dan Bender, Senior Vice President, Commercial Team Lead at Westfield Bank, along with his colleague and good friend Kevin Vonderau, who is the Chief Lending Officer and Executive Vice President at Westfield Bank. How do our listeners get a hold of you guys?
I think the best thing is just go to westfield-bank.com, and then you can look there. All our information is on our webpage, and there's even a landing page for ESOPs that has Dan and some of his co-workers on there to get a hold of if they want more information. So that's the best place to start.
Great. Dan, any closing comments?
No, the only other thing I would say is if listeners are interested in learning more, there's a lot of good organizations that they could reach out to. I know you mentioned already the National Center for Employee Ownership, also the ESOP Association. Both of those have local chapters, and right here at Kent State University is the OEOC, which is the Ohio Employee Ownership Center. So some good organizations there. Check out their websites. A lot of good research is done, and there's a nice community of folks that are in the ESOP space that are here to help those business owners explore and make that ultimate transition if that's what's best for everyone involved.
Great. Thank you, Dan. Thank you, Kevin. Thank you. Our guests today, again, Kevin Vonderau and Dan Bender from Westfield Bank. This is your host of the Finish Big podcast, Mark Dorman. Until next time, ladies and gentlemen, finish big. Thank you.
We hope you enjoyed listening to Finish Big, the podcast with Mark Dorman from Legacy Business Advisors. Click the follow button to be notified when new episodes are available. Learn more at legacybusinessadvisors.com or call 330-350-5410. Please be aware the information in these podcasts represent the views and opinions of our guests and do not necessarily represent the views or opinions of Legacy Business Advisors. The content is for informational and educational purposes only. The content is not intended to be a substitute for professional tax or legal advice. Always seek the advice of your legal or tax professional with any questions regarding your specific situation.